You are listening to Charting Wealth's comprehensive weekly review and forecast for the week beginning January the 17th, 2017. Here's how we do it, folks. We go over the weekly charts on all of our ETFs, and we look at 4 ETFs. That is the S&P 500, the Qs, which represents the Nasdaq 100, gold, and the 20-year bonds. Now, we review not only the weekly, we also look at the 2-day and the 2-hour, and then we talk about the news that moved the market in the last week and what might be moving in this shortened trading week, with the Martin Luther King holiday taking one of our trading days away from us. So we only have 4 days to look at this week. But let's go ahead and jump right into things. The first chart that we have up is SPY. Now that is the Spiders S&P 500 Trust Series Exchange Traded Fund. Where is it now? Well, it rotated going over, going up on the 25th of December. 25th of November 2016, moved up all the way through December, and has continued to move up throughout January. Actually ended with an up week. Now, again, what do we have going on when we delve into our charts and really look? And for those of you who are following us with our daily market summary worksheet, go ahead and mark that we're continuing in an up move. Now, what we're really doing as we look at our charts is we're really sliding sideways. We have not gone above where we hit back on the week ending the 16th of December. We've really trudged sideways. In fact, our 2-day chart crossed over going down back sometime during the week of the 30th of December. And we see that our derivative oscillator on the weekly chart is losing energy. So keep that in mind. In fact, as we move further into our charts and go to our 2-day chart, we can see that it again crossed over going down back on the 30th of December, and we've never had our PPO, our price percent oscillator, rotate back over going up. We see our derivative oscillator is losing its downward momentum, but we haven't had that crossover going up yet. We actually ended the week on Friday. Friday was up 0.23%. And again, it was an up week, but really what we've seen is just a sideways slide in prices. So we aren't seeing a huge upsurge as we jump into the new year. If we look at our 2-hour chart, we can see that it, again, at the end of the day on Friday, well, in the morning, it moved up and then it sort of slid down and a little back in the afternoon. So we don't have a trade on the S&P 500 at this time. Why is that? Well, the weekly chart is up, but again, our 2-day chart is down. And until that crosses over going up, we do not have a trade on this chart. We are trend followers. Of course, we want our weekly chart to be moving in the same direction as our 2-day chart, and that is not happening at this point. Let's now move back to our weekly charts, and we're going to go on to the Qs. What is the Qs or the cubes? That's the Nasdaq 100, and we can see that it crossed over actually at the end of the week on the week ending the 6th of January. It's last week. As you listen to this, it could be the week before last. Anyway, it was a week to 2 weeks ago, depending on how you want to look at it, but it crossed over going up. We've now had another week of up movement, and we have our weekly chart moving up. Our 2-day chart actually rotated over all the way back on the 9th of December, moving up, and that has continued to help us move the charts up. Now, we had a nice week ending on the 13th with more up movement. Unlike the S&P 500, the Nasdaq has actually moved up, not simply slipped sideways. So and again, go ahead and mark your charts for those using our daily market worksheet, that the Qs, the Nasdaq 100, is in a confirmed up move. Now, if we look at our 2-day chart, what do we see going on? Well, our 2-day chart crossed over going up all the way back on the 8th of December, lost a little bit of energy, and then knocked itself back up again right before or right as the weekly chart was crossing over going up. And that upsurge over the last four two-day candles, that beginning upsurge is what rotated over the weekly chart into an up move. So it was a good week for the Nasdaq 100. In fact, Friday ended up 0.34% for the day. Now, if we go from our two-day chart and look at our 2-hour chart, what do we see? Well, we've had the pullback that we were waiting for. That pullback started at 2 p.m. on the 11th of January, but we haven't had the crossover yet going up. Maybe that will happen at the beginning of this next week as the market opens late on Tuesday, January 17. We shall see, but until we have that crossover going up, we don't have a confirmed up move for us to be able to trigger an entry point into the Qs. As we've been telling you throughout the course of this past week, get ready for that. If and when it occurs, do be aware that we are at the top of the Bollinger Bands. We're actually out of it. Maybe the market will surge when it opens on Tuesday, and you might have an entry point. We'll just have to wait and see. We haven't seen that happen yet. In fact, it bounced off the signal line, the PPO did, and is actually headed back down again, but that could easily change. Again, this is just the 2-hour chart. That could easily change on Tuesday. We shall wait and see. Of all of our charts, this is the closest one to giving us an entry point and a potential trade. But, my friends, it has not happened yet. Back to the weekly chart, we'll go on to TLT. What is that? Well, that is the iShares Barkley 20-year bond trust fund. It tracks the 20-year bonds. What do we see on the weekly chart? Getting closer to crossing over, going up. Maybe we have a bottom in bonds. We don't know at this point. We don't have a trade because our weekly chart is still in a confirmed down move. Now, what's going on with our 2-day chart? Well, it crossed over back on the 22nd of December going up and then was followed by an up move in our 2-day chart. And we've seen some nice up movement, but again, we are trend followers, and until our weekly chart's moving in the same direction of our other charts, we don't, particularly our 2-day, then we wait for the rollback on the 2-hour, and then when it moves back in the direction of both of our longer charts, the 2-day and the weekly, that's when we get in. Does that sound simple? That's very, very simple. And that is, again, why we use Occam's razor. We use that principle to keep it as simple as possible. As Einstein said, make everything as simple as possible, but not simpler, because simple things tend to work and tend to fail less. Think about all the rockets that explode on takeoff because they're so darn complicated. Think about the Soviet rockets that are very, very simple, that are workhorses that rarely explode. So we are trying to be a Soviet rocket rather than a complicated one that doesn't get off the launch pad. Okay, that's where we are on the 20-year bonds. We don't have a trade yet. Now, again, I encourage you, again, we're not a stock calling service. We're an education firm. We want you to practice. If you want to practice calling bottoms, you can sure do that. You could have jumped in back on the 28th when the 2-hour chart crossed over going up and made that play. That's fine. We're not using real money. I encourage you to practice, to try things, come up with your own ideas. What we want to do is give you the knowledge and the practice, following us every day for 10 minutes during the week. Of course, our weekly review and forecast is typically about 5 minutes or so longer, but we want you to listen every day, fill out your daily market worksheet because that's how you supercharge your training, and then take what we teach you that's useful to you in your type of trading and use it. What's not, discard it. Add your own things in. Practice, practice, practice. Get good at this, and then, and only then, when you make up your own mind that you're good enough, that you've made many, many, many successful practice trades, then you can use your own money, make up your own mind, and do what you want. Because you know why? It's your money, and it's a free country. Lastly, okay, make sure that you mark TLT for your daily market worksheet. Still in a confirmed down move on the weekly chart. Lastly, we're going to gold. We're going to look at gold first on our weekly chart. Gold, for the record, TLT was down on Friday, 0.48%. Gold up on Friday, 0.26%. Gold, just like the bonds, still in a confirmed weekly downtrend. although it is getting closer and closer to rotating over, going up. Derivative oscillators losing energy. It's trying to move up, has not happened yet. If we look at our 2-day chart on gold, we can see that it crossed over on the 30th, moving up, and nice solid up movement, nice clean trend line with 4 2-day candles moving up. Derivative oscillators continue to gain energy. Nice clean up movement, but again, we don't have our parameters, which are we are not bottom callers, we are trend followers. We hope to see in the near future that weekly chart rotating over in the same direction as the 2-day, and we might have an entry point in our standard form of trading with the way that we teach. Now, as we go to our 2-hour chart, you can see that it actually rotated over, going down back on the morning of Friday the 13th, and then sort of tried to tick up some in the afternoon. Still a bit of an up day for gold, 0.26%. We don't have a trade in gold yet. What are we waiting for? Those of you who have been following us a while, you know that our 4-hour chart has been so prescient in gold. Perhaps it did start working again around the 22nd of December, tracked sideways a little bit and then started moving up at that point. We shall see if it rotates over, going down, and gives us another accurate signal. We have used over and over the course of this last year our 4-hour chart as a total trading chart. What do we mean by that? Well, if you follow when our 4-hour chart has crossed over going up and down, it has been an incredibly accurate chart for watching gold move. We've had a few blips along the way where it has not been totally accurate, but again, if you have yourself trade in the direction of the 2-day or the weekly chart, like we always say, all things being equal, the market tends to move in the direction of the largest chart. So you can use that to help you if you're trying to use the 4-hour chart as the only chart that you are using to make your trading calls. It has worked incredibly well over the course of the last year. It stopped working at the end of 2015 in December, started working again right there in about mid-January or so of 2016, and then was like a charm. Maybe we'll see the same thing happen in 2017. Folks, that's where we are as far as our charts go. Now we're going to switch over to the special portion of the broadcast that you only hear once a week. We talk about the charts all the time, but we don't talk about news a lot. Why? Because news can confuse. In fact, as they say on Wall Street, you buy on the rumor, you sell on the news. That means that the folks up on Wall Street many times have more, I hesitate to use the word inside information because of course that's illegal, but they have more information than you might otherwise have. By the time you hear it on Bloomberg or CNBC or read it in the Wall Street Journal, typically that trade is over. So that's why we don't focus on the news. We focus on the charts because the charts tell us actually what's going on. But we're going to review what went on over the course of this last week that had some effects on the market and what might have effects on the market in the coming shortened trading week. So what did we see go on this last week? Well, U.S. retail sales rose just over 0.5% at 0.06% in December, but they ended up being flat when you excluded gasoline sales and automobiles, so quite disappointing during the holiday season. We saw an upbeat outlook, however, for small businesses. Apparently, the Trump effect has really affected the way that small business owners, according to the National Federation of Independent Businesses, they saw an incredible jump in small business optimism. In fact, they termed it, quote, stratospheric as far as the number of business owners who expected their businesses to do better in 2017. It actually jumped up 38 points. What's interesting about this is the highest that the index has been since Obama was elected. It's the highest since 2014. Obama was not great for our economy or for at least the optimism of small businesses. We also see that China's exports, when we look overseas, their exports fell a second year in a row amid persistent weakness in global trade. In 2016, exports fell 7.7%, and their imports also slid about 5.5%. There were some bright spots, including domestic demand appears to be improving, and of course they imported record amounts of all sorts of commodities like copper, iron ore, oil, and soybeans. Now let's also talk about what the World Bank is saying about the global economy that really means anything to you. They're expecting an expansion of about 3%, 2.7% to be exact. We'll see just how that goes. And the pace of U.S. stimulus has been questioned. Of course, the news media has done nothing but attempt to devalue and undervalue any kind of Trump effect, saying at this point that since Trump didn't lay out a clear timetable and framework for U.S. tax cuts and regulatory reform, like he's going to somehow force the Congress to do everything his way, that, again, the markets are concerned that this stimulus might come too late. We shall wait and see. What about Germany? Well, they've seen an uptick in their growth in 2016, despite all of the problems that they were having internally. The German exports have also hit a record in November, rising 2.5% versus years earlier when they were having problems and struggling. Also, forecasts for 2017 call for a slight decline in the German growth rate, somewhere between about 1.1 and 1.7%. We've also seen the Bank of England's Mark Carney tell us that the Brexit is not going to be nearly as big a problem as he thought it was. In fact, he now says that the bank will very likely revise its economic forecasts higher in the coming months. So that's pretty good news. Now let's talk about the things that might move the market over the next week. Of course, as we already told you, markets are closed on Monday the 16th. What's going on Tuesday? Well, the World Economic Forum in Davos is going to begin on Tuesday the 17th. Of course, if you follow any of the news channels, they'll be there, be telling you all about what all the globalists are up to. Be interesting to see how much attention Trump pays to any of those things. And again, interesting but not dispositive on anything for us. On Wednesday, a couple of things are going to happen. The United States is going to report its consumer price data, and the European Union is going to report its consumer price data also. Again, if any of those things are particularly good or particularly bad, they could have some impact on the markets and send them higher. Also, the European Central Bank is going to hold a rate-setting meeting on Thursday the 19th, and then Friday's going to wrap up that shortened trading week with China reporting retail sales and gross domestic product figures. Now, I want to encourage you, if you don't already have your copy of the Stock Trader's Almanac, it's my really go-to guide for the markets. They have some particularly interesting things to say about this week as it starts and this shortened week of trading as we jump into it. So I would encourage you to pull up your Stock Trader's Almanac. If you don't have it, you can order it at Amazon. You can go to stocktradersalmanac.com and order it there. You can actually sign up for their service and get it for free. I would encourage you, if you don't already have a copy of it, if you're serious about investing and trading in the market, they have so much great information and historical data that helps you see trends and understand what's going on in the market. That's really the only thing we really pitch here. I don't get anything for it. But besides, of course, my good friends at freestockcharts.com and TC2000, that's really the only things that we ever talk about that you actually might consider purchasing. Folks, we so appreciate you being with us. If you appreciate what we do, we ask you to go to our website, chartingwealth.com, sign up for our newsletter. Guess what you'll get? You'll get this video. You'll get the video version of the video audio podcast that we do every day that the markets are open, plus our comprehensive weekly review and forecast. They'll come right to your email box. And along with that, you will also get links to our How to Read a Stock Chart video. If you don't have that, man, you've got to have that to understand what it is we're talking about. You'll also get the daily market worksheet, a link to that you need to print out copies for every day of the week to fill out while you're listening to our podcast. It will supercharge your training. It is magic. I hear from people all the time about what it has done for supercharging their training. There's nothing like taking pen to paper as you listen to the podcast. Maybe stop it at times to make sure you've updated everything correctly and follow along. It makes you do the work. You can listen to anything and get nothing from it, but as any teacher will tell you, if you listen, you think about it, and that hand-to-eye coordination, you put it down in writing, you can refer back to it, you can make notes, you know what you're thinking and what you're doing. It gives you a diary, a journal to go back to. I can't tell you how important that is. Or you can just listen to us every day, let it go in one ear and out the other, and wonder why you're not getting any better at doing this. Folks, the bottom line is, if you will spend 10 minutes a day with us, you can become a marketing master. I can't tell you how long it will take. A marketing master, a stock market charting master. Let me say that. That is worth its weight in gold. If you can read these stock charts, can forecast where they're going, can get in at the proper time, get out at the proper time, do you realize what that's worth? That is like your own little private printing press of money. You figure out how to do this, you practice, you develop a system that works. You are set. You're set. So I encourage you, but the only way it's going to happen is for you to get on the stick and do this every single day. Dedicate yourself. I don't care if you stay up an extra 10 minutes to do it. It's the best 10 minutes you're going to spend for your future. And what do we charge you for this? Nothing. But it's the hardest thing in the world to do. That is to do something consistently. It is persistence that separates winners from losers, from those who learn how to do something and those who just wish. And if you don't start now, you'll regret it because you'll have to start later. So start today. If you've started in the past and you fell off the wagon, get back on the wagon. Pick yourself up a 5-step program. Get back on the wagon and stay with us diligently day after day after day. You will see the dividends, my friends, if you just do it. Just do it. Do it every single day. That's how you're going to get good at it. And one day you're going to realize, I've done it. I've mastered it. I now have everything I wanted. So please stay with us. Give it a shot. Keep trying. The minute you think it's not working, that is where you're on the cusp of great achievement if you just push through the hardest times. So stay with us. We love to hear from you. Appreciate what we do. Go to our iTunes channel, Charting Wealth at iTunes. Give us a 5-star rating. Subscribe. You guys have made us as high as number 6 in the world on Stock Market Podcast, and we so appreciate that. Also, subscribe to our podcast at YouTube. We appreciate that too. And you can go to our Facebook page, say something nice about us. We appreciate all y'all do for us, and we'll continue trying to do everything we can to help you master these charts. God bless. All the best. Happy holidays, Martin Luther King Day from chartingwealth.com.